Gold, after achieving the highs at 2018 in the earlier trade, today it is traded with a modest bullish bias. In fact, the highs at 2015 it is found to be a very great and very good resistance. It has failed to break past these levels. Now, what to expect? Is it going to erase some of the gains for the day? Is it going to drop towards 2000 levels? Or we can say a bullish bias is there and it is going to stay bullish. Which position you should take trading gold and crude oil? Crude oil is also seen getting the support at 74.2 levels. Since then it has reached, but it is yet far below the buying levels at 75.2. So what to expect? How to profit? We will see with the help of charts and indicators. First we'll look into gold, followed with crude oil. Watch till the this is the second update for the day. Those who watched the first update must have already profited. Thus, if you are not subscribed to the channel, do subscribe to the channel to get the latest updates. Also, you can be part of my free Telegram channel or join the platform forexfunda.com for more details. Let's start. First, to look into hourly charts of gold. It is consistently yielding higher lows, higher highs. After this good, stronger bullish candle here, it is just staying in the zone. I will now wait for it to break past. See, 2003 2002 is the support level which it needs to break past by in order to confirm it. Right now it is still confined within the bullish zone. It is not showing any bearish. Yes, it traded with a divergence from the moving average, trying to converge. The moving average is right now sitting at around 2008 levels, which is indeed a very good support, and below 2008 also 2005 2002. So this is the zone where we have maximum support for gold here. If and only if gold is seen trading below 2002, you can say that the bears are taking over and then more bearishness can be seen. Still, for the week, for the day, as long as 1990 is not breached, you should not treat gold as bearish. Very clear. Stochastic looking downwards here. MACD, which has shown a good bullish momentum, is now converging. It is not yet crossed over, and we have seen just gold staying within these cycles on MACD for long now. Thus, probably if it crosses over, we can see a little bearish cycle here in gold. RSI coming out of the overbought zone, coming to 2. Now look at 2-hour charts. Lower highs are seen, lower lows are seen. It is still confining its movement between this candle and yes, this candle. So it is consolidating more. Last week, largely we have seen gold consolidating in this zone. It has given a breakout and now consolidating at higher levels. Any breakout below 2000, in fact 2008 2005 zone itself is a great support zone, but any breakout below this zone may bring little more bearishness. I will wait then for 2002 levels, and if it does break below, you can say that the bears are taking over, else it is still trading in this bullish channel. Higher highs, higher lows are definitely observed here. The bottom of this is somewhere close to 2000 levels. The stochastic near to top. MACD has seen good divergence, good bullish move here. It is trying to converge. It is not yet crossed over yet. RSI is staying overbought here. Coming to 3. Now look at 3-hour chart. See, the preceding candle was a swing candle with higher highs and higher lows. This candle has just started. It has achieved the highs. If it shows a pullback, if it stays below this zone at 2008, then you can say that a little more bearishness might take it further down towards 2005 and 2002 levels. And breaking below 2002 is where the reversal is confirmed for the day, where more bears will take over. So right now it is not showing any such sign. It is still confining itself between the consolidation zone here, higher lows, lower highs here. Stochastic near to overbought. MACD crossed over here, trading with divergence, trading bullish. RSI is overbought here as well. Coming to 4-hour. Now look at 4-hour chart. See, 2 candles with increasing body size, but you should look at the push from the top side. There is a stronger push from the top side, suggests that there is a pressure here from the upside. Price is not willing to stay bullish. It is getting a constant push on the downside. However, on the downside, it is not yet breached any of the lows here. Thus, wait for it to break below this lows at 2008, where we can see a little bearishness for 2005, 2002 and below levels. Also, you must note that the divergence of the price from the moving average calls for it to converge. And we have seen it always that since last few rise, gold, whenever it tries to diverge, it is always tried to converge towards the moving average here. Right now, the 20 period moving average sitting at around close to 2000 levels, which is indeed a great support. The stochastic here is near to overbought. MACD has just crossed over, trying to trade with divergence and bullishness. RSI is overbought here. Coming to the day. On the daily charts here, yes, it is forming a base here. It is trying to stay bullish. It is trying to achieve higher highs. And See, the highs for this channel is somewhere here at 2025, 2030 levels, little distant levels here. Also, if you see this increasing body size is observed, right now it is showing too much of reluctant in going down. It is still keeping itself bullish. But also so far for the day, we have seen it getting resistance from 2015 levels here. And 2015 certainly has proven out to be a great resistance. Thus, for the day, before I give you the trading levels, if you want to learn this art of trading, you should join my mentorship batch. 28 batch is announced. You can book your seats now itself. Reach out to me for more details. Also, you can be part of my signals channel and my platform forexfunda.com. On this platform, you will get much more than what you expect. It is having economic calendar, the live charts, the availability of experts where you can schedule a call and discuss, and also the forum discussion forum is also available. Do visit the platform forexfunda.com. On signals channel you get the telegrams VIP signals where you just trade as per the signals and get the benefit. Reach out to me for more details via telegram or email. Let's have a look here. See, for the day I will recommend you to sell here at 2008, where you can expect 2005, 2002 as the support level. Remember, it is still a riskier trade because 2002, 2005 are going to play out a very, very strong support and it can bounce back any point of time. Thus, if you're selling at 2008, you have to be, and gold is only to be treated bearish. We can only expect a drop. If it drops below, if it trades below 2000 levels, you can say the prices have completely reversed and we are going to look forward to a major drop. On the upside, I will recommend you to buy here at 2016 levels, beyond which you can expect 2020, 2025, and then 2028, 2030 zone. 2028, 2030 zone for the day is going to be a greater resistance, and possibly if it does not achieve this and stays above 2060, it may achieve these levels, but tomorrow there is a possibility to it. Thus, take your trades accordingly, buy about 2016 and expect it to rise more. Trade accordingly. Now let's have a look at crude. Now see, crude oil after getting close to 74.2 has seen a stronger reversal. It is a V-shaped recovery here on the early charts. It has earlier seen a drop from 75.2 75.5 zone. It has again back to these levels. Now if you look at what has happened on crude oil, see on the daily chart, certainly there is a chances of reversal. Right now on the early charts, it has hit a bottom and trying to rise. Earlier in the day itself, I have mentioned 73.8 74 zone. At worst, you should watch out for these levels. It can possibly bounce back, and that is what has happened. Now above 75.2, when the lower price stays above 75.2, you can expect another round of rise where we'll look forward to 75.5 75.8. Now if it breaks past 75.8, we will expect more rise. Else, as long as 75.8 for the day is not taken, we have to be cautious and alert. Now look at the stochastic. This is rising. The MACD was trading bearish. It is converging now, and it can possibly look forward to crossover for a rise. RSI rising, coming to 2 hour. Now look at 2 hour chart. See, there is a long tailed candle. This is a possible reversal candle here. This candle is what I will wait for. Where it closes is going to remain important. A rise above 75.2 and 75.5. This zone is going to remain important for crude oil, because beyond this, the reversal can be expected in oil. Right now, it is giving you lower highs, lower lows. Wait for it to give a break. The stochastic rising from the oversold. MACD is still divergent and bearish. It can possibly converge crossover. RSI is rising as well. Coming to 3 hour. Now look at 3 hour chart. See what has happened on the 3 hour charts. Preceding candle, higher highs and a sharper drop. Now with this sharp drop, look at the last drop here at 73.8. Now it is also continuing with higher lows here and lower highs. Zone of consolidation is what I can see. Thus any breakout beyond 77.2 or a breakdown below 73.8 or 73 levels is the confirmation of the bearishness here. Right now it is still very much trading in zone. On the upside, we have to wait for it to break out beyond 75.5 75.8 zone. Stochastic was oversold. It is trying to recover. The MACD is still divergent and bearish. It can possibly converge. RSI is rising. It is showing a little rise. Coming to 4 hour. Now on the 4 hour chart, see, very, very important. Just look at this. the preceding candle with the highs here and a good swing here. It is trying to reverse. I will wait for the higher highs to be breached, that is 75.5 levels to be taken. Once it stays above 75.5, that is the point where you can confirm that a little rise can be expected. Right now, it is not to be treated for a complete reversal here. The stochastic here is oversold. The MACD is bearish. The RSI is flat. Coming to the daily. Now, see what has happened on the daily charts. Yes, as what we have seen, it is consolidating here. Also, there is a steep drop. Thus, for the day, we have to be watchful here at 75.5 and 75.8 levels. Two levels it needs to break past by. If any point of time oil is seen trading above these levels, we can expect more bullishness, and on the upside 77 is the greater risk. Now, stochastic here looking downwards, trying to trade bearish. MACD has crossed over here, trade at bottom, trying to stay in green. And as I have mentioned several times, see, look at MACD. The MACD has crossed over almost at a lower levels. Thus, it must try to retrace a little on the upside. RSI is looking downwards, trying to stay bearish. Now, considering this, I will recommend you buy crude oil if you see it is staying the lower price above 75.2, but with a caution note 75.5, 75.8, two major resistances it exists, and thus it is only to be treated for a reversal. It is only to be treated bullish if it stays above 75.8. Thus, as long as the price stays below these levels, we have to trade with caution. On the downside, yes, a selling entry at 74.5 can be taken, but 74.2, 74, 73.8, the greater support zone exists here in between 73.8, 74.2 levels. Any drop below 73.8 is where the bears will take over, and then we can look forward to 73, 71 levels. Yes, below 73.8 is where the bears will take over and more bearishness will prevail there. But we have to be cautious, alert. On the downside 73.8, 74.2 zone. On the upside 75.5, 75.82 levels. As long as oil stays between this zone, we have to trade with caution. If you're taking a buying entry, you have to put your stop losses at your entry price. And likewise on the sell side, as long as it stays between this zone. Take your trades accordingly. Like, share, subscribe, and comment. Join my mentorship batch. Join my signals channel. Reach out to me for any of your queries. Also, you can schedule a call with me if you need any consultation with respect to your existing trades. Thank you very much. See you again tomorrow with the Asia and Europe session.